Welcome to FutureX, the podcast where we look to solve the variable that is the future of Web3. Every week, we'll talk with some of the brightest minds in the blockchain and Web3 space, from top investors to founders and builders, paving the way for a decentralized world. So what is the future of blockchain? What will Web3 look like in 2050? Let's explore together.
Hello, everyone. Good morning, good afternoon, good evening. This is Matt, and welcome to today's FutureX session. FutureX is a forum for thought leaders, investors, as well as core community contributors in the DeFi world and the Web3 world and NFT world to come and share their views on the market, on the innovation and the future of the Web3 world. So today, we're very happy to have Sam, who leads the DeFi practice at Matter Labs for zkSync, and give a quick intro about yourself to our audience. Thanks.
Sure. Yeah, thanks, Matt, and thanks for having me. So brief background on myself and how I got into crypto. So I bought Bitcoin at $20,000 in 2017, and then a year later I sold it at $3,000. And that was my first smack in the face. And then I just kind of ignored it until early 2020, where a friend from college told me to start looking into Ethereum. There's a lot of developers, and I started following closely. And around DeFi summer, that's really was like my inflection point and just going all in. And professionally, everything. From a investment perspective, I was aping into every food fork. I was, in Twitter, Telegram, Discord, and I was just really hooked with the culture. And since then, I've been investing and researching and trading. And nowadays, I do a little bit less of that, and I spend more time advising projects on their growth strategy and building out the zkSync ecosystem.
Thanks, Sam. Yeah, I also started buying Bitcoins, I remember. That was 2013, but unfortunately, I also sold it too early. I sold it in 2014. I should have held everything. Then, I will be invited to this FutureX show. Yeah.
Hey, at least you sold it for a profit. I sold it for a loss.
Okay, a tiny profit. Yeah. The opportunity cost is so high. Thanks. And now you're leading the DeFi practice at Matter Labs. Can you tell us a little bit about Matter Labs?
Yeah, sure. So Matter Labs is, you think of it as the parent company, and we are the creators of zkSync, and we have zkSync V1, which is our simple swap and transfer on top of a zk rollup, and then zkSync version 2, which is zkEVM, where you're able to launch smart contracts on a zk rollup. And our mission is to accelerate the mass adoption of crypto. So part of that requires a system to be resilient, decentralized, and the goal is to put the power into the community eventually, once it's secure enough and self-sufficient.
Yeah.
So eventually,
thanks.
Matter Labs will not exist.
I know the zk solutions are getting very hot recently, right? Even Vitalik mentioned that's a key solution for Ethereum's scaling issue. And I know that you guys have also raised a big ticket of funding earlier. So may I know a little bit more about the highlights of the product, which is zkSync, and how that could be different from other zk rollups?
Sure, and maybe it'd be helpful to just go back and really get into why zk rollups are important in the first place, and why it's such a hot topic with Polygon and Starkware and all sorts of other projects that have started coming on board and challenging our position. We're all working for the same goal, right? So it comes down to the blockchain trilemma, which is the idea that decentralized networks can't provide all three of the benefits of decentralization, scalability, and security at the same time. So, like for example, if you bought like an NFT like during NFT summer in 2021, or like you swapped on Uniswap and during there's high gas usage, you know that it's just really challenging to use Ethereum. It's super expensive. You got to use high gas, and you know you're still not guaranteed for transactions to go through. You might get front ran. So there is a way to solve these shortcomings, which is through scaling via rollups, and that not just enables you with the scaling, but also ensures that you don't give up what a lot of people care about, which is the security and decentralization properties, right? If you're a whale, you want your funds to be secured on the most used, the most censorship resistant, and most reliable network that exists. So these rollups are what we call layer twos, and they help with scaling, and they're based on and what we would consider the base consensus layer, which is Ethereum, which is what we call layer one. And what happens is these transactions are bundled into one basket and then executed partially off chain, which is what we call layer two. And then you send them back onto layer one. And that's what leads to the lower fees and the higher speed, while you still leverage the security of Ethereum. And within that, you have zero knowledge rollups and optimistic rollups, which optimistic rollups have been, really quick to market. So you see Arbitrum really have a lot of interesting things being built on top of their ecosystem, and they're able to accommodate any Ethereum smart contract, which is the reason why you've seen them go to market first. And the drawback for them is they depend on game theory. So like when you go withdraw and validate their blocks, they depend on fraud proofs. So that creates latency when you want to withdraw back to layer one of about 7 days. So you do hit some liquidity issues and some trust issues and some of the same scaling issues eventually. So the other perspective is zero knowledge rollups, which is, on the other hand, they don't face these kind of issues. They have a different challenge, right? So the challenge is they perform, it's just very engineering. It's an engineering challenge. So like most people thought, it's really hard to just have simple transfers already. So you add on top of the complexity of having smart contracts being, compliant with zk rollups. It just, people thought it was very far off in the horizon, like 5-10 years out. But now we've gotten so close. I think there's just been so much energy, and this is why we've seen so much momentum, that this would be like the holy grail of Ethereum scaling, because you're just depending on math. You're not depending on these other assumptions, and the proofs are relatively small, so that you're able to do these quickly and efficiently. So you have all the benefits with none of the trade-offs. It's just an engineering challenge. But right now, we've launched mainnet, and we're about to open it up. I would say, like, compared to some of the other the players out there, I think we're one of the thought leaders in terms of where we are, and also I think from a differentiation perspective, it comes down to like our mission and our ethos, right? So yes, our technology is different in terms of the way that we do our proofs. We have snarks, and we have certain EVM compatibility into the nitty gritty of that later. But really, I think when we partner with projects, usually they like us because of our mission and our alignment with Ethereum. I think if you talk to any of the other zk EVM projects, they're not nearly as close to, in terms of our commitment to being open source, having permissive licensing, and really being a public good for the community. Because I think that's what it's all about. Like at the end of the day, it's what the network that drives the value, and part of the thesis is enabling what's already being built on Ethereum and
Mm.
other EVM chains and bringing them onto zkSync. So all that together hopefully answers a little bit of what you asked for.
Yes, definitely, Sam. It reminded me of like maybe 2 years ago when we were looking at some of the different rollup solutions. The mystery at that time was basically how long, right? So some of the ZK solutions would really come live and be operational, for developers to actually deploy the smart contracts, right? Like you said, people expected, 5 years, 10 years, um, and now we're almost there, right? With the zkSync 2.0, right? Already on mainnet, and then um, I believe there must have been a lot of different projects, on the DeFi side, on the infrastructure side, already lining up to deploy. Maybe if possible, share with us some of the projects that already signed up, already deployed, especially the ones that are commonly known to the users. So our audience can also get to test them when they're actually live.
Sure. So yeah, our ecosystem has been growing, and I would say anybody in the top 30 DeFi protocols have either committed or already testing on zkSync. So yeah, it goes from Uniswap, Curve, Yearn, um, Aave, a bunch of others. Obviously, all the key infrastructure that comes with that, like Gnosis and Chainlink, and what you would expect. And I think some interesting ones that are more ZK native that you can find. But yeah, I think what I've seen is there's been a really big interest in porting over again, because part of the low lift engineering and being able to have all the benefits, it's driven a lot of folks forward. I think specifically, I know Uniswap, I was helping with the proposal for deploying Uniswap v3 onto zkSync. It would be the first Uniswap, smart contract on a ZK rollup. So I think all these things are like very novel, and I think there's a little bit of a race between projects to be the first and one of the first few dApps that come on board, because I think you'll see a lot of the users flow towards those, at least initially. So it's very exciting.
Thank you, Sam. So we've also noticed recently, Meta Labs announced a 200 million funding raise and potential future tokens for the zkSync ecosystem. Maybe we want to get some of the insights from you on these, and anything that you've planned for 2023 in terms of milestones after the zkSync 2.0 mainnet launch.
Sure. So, well, first I'll take your question on the fundraising and what we're going to do with it. So I expect that to be used to accelerate our development of zkSync itself. And part of that is also to improve the developer and user experience, and making sure that it's easy to onboard projects, and also maintain those relationships. And then that also includes an allocation to help foster adoption and community funding. And I expect some announcements during ETH Denver, and with regards to our partnerships, our milestones, and some other sneak peeks. And while we have no token today, we're obviously watching what other L2s have been doing and how they've supported their community, which is in a variety of ways. And then in terms of the milestone ahead, so I think right now we're just heads down on making sure ZK 2.0 is as flushed out as possible. We still have work to do while we are on, we call it baby alpha, because right now, the mainnet is launched, but it is, for internal testing still. So what will happen after on our next milestone? And I would expect this to be around, early March, late February. This is when we start welcoming projects that have registered to launch on zkSync. And, that's going to be, it's equitable thing. And just as long as, projects have registered, they're whitelisted. and they're able to deploy their smart contract and start testing it out ahead of the full alpha launch, which is I would expect a few weeks after that. And during that, we'll keep running security audits and contests and bug bounties and improve the developer tools. And I think by then we'll have the full alpha launch. We'll finish all of those security audits, and then we'll be able to open it up for all users, for all projects that want to deploy their applications, and you'll see the clocks churning at that point. And I think for us, after that, I think it comes just with a lot of optimization in terms of performance and making sure TPS is as fast, as high as possible to the magnitude that exists, optimizing for some of these and rough edges, and then also decentralizing eventually, right? So down that roadmap, in terms of taking away and giving it more to the community. And then I think after that, I think we plan on doing more research around hyperscaling and hyperchains and more fun stuff. But right now, I think for the year 2023, we're very, very focused on making sure that the layer 2 experiences is complete as possible.
Yeah, that is a very focused approach. This is kind of, people say it's the bear market, and building is the right theme. And having a very focused goal for building this year is definitely the right strategy, right? Actually, on that point, do you see anything like in the overall like market sentiment potentially affecting the launch of the new product, or you're still seeing good amount of interest regardless of the market cycle? And if anything, what are some of the strategies you guys put in place now to mitigate this risk?
Yeah, that's a good question. I think for us, the demand has been very high throughout. I think in particular for us, like we're not trying to time the market or anything. We want this to be shipped out yesterday. We want this to be out for the community, for everybody, and get this baby launched, right? It's a race. So we're not like holding back the time, where we get the most users. I think everybody is waiting for it. So in that regards, I think demand is there. I think just how can we get it out in the right way? Because it is a foundational thing that you only have one opportunity, and you got to capture it. So that's that. But in terms of like how we're looking at partners and building out the ecosystem, I mean, obviously one side is DeFi, and that's the part where I own, but we also have other members that focus on some of the other verticals, right? So NFTs is also a very big one in terms of bootstrapping your community early on. I think you've seen this play out in other layer 1s and layer 2s, where you have a few mints in the beginning, and there's a rally of activity that happens, and it feeds into DeFi and fits into everything else. And then also like with enterprise, I think that's also the elephant in the room, right? Because they actually have a lot of the value that can be unlocked through a scaling solution like zkSync, because they have so much capital, and they might not necessarily just want it to be on Ethereum, but they don't want it. They want to make sure it's still secure, and really the only options are like a layer 2. So we're speaking with banks and large payment processors and things like that, in terms of like how can we bring some of those transactions, or at least some of those TVL in some way or form. So that could be through real world asset onboarding, tokenizing, treasury bonds, tokenizing collateral debt. So a lot of different ways that we're talking and discussing. So I would say we expect a few partnerships later down this year, and hopefully, ideally, like some of these come live in the next few months.
Yeah, Sam, you mentioned a good point, right? So with zkSync's capability, you not only connect Ethereum, but also can help do transactions in a faster, cheaper, and secure way, right? So this sounds like a potential fit for some of the enterprises as well, which honestly speaking, many of the blockchain networks today could not really appeal to the enterprises, right, because of the nature. But yes, it's very good to hear that you guys are also making progress in this new direction. Yeah. And so I think we've seen a lot of, I would say, positive side, but also I want to hear your opinion. Do you see any, say, any sectors in this market a little bit overhyped and kind of will eventually fizzle out in the next couple of months or a year to come?
Yeah, I'm more of a bull in everything, and I'm usually optimist. But yeah, in terms of, I think the way that DAOs are constructed today, I'm not very bullish on like the structure. And I think it's the way that they're organized. I think it's a little bit. It just can't be as efficient as like a traditional business model, right? So I think it needs to be very thoughtful and thought out, and you end up with like these free rider problems, which makes the whole organization less valuable. So I don't know. That, and also like what goes in with that is like governance. So the way that governance is done today, it's really tricky because I've worked with certain protocols, and its governance kind of varies within each of these. And I think the way that it's carried out today, it's also a little bit more of a little bit of like a dance, right? So whether the governance token has actual utility or not, and the people who actually own the token, the float, it's a bit of a tricky game to play. So I think I think those two things are overhyped, and I think the narrative kind of also shows that if you look at like what's been trending in terms of value. There's tokens that give more utility, like specifically like some tokens that are trading around like a GMX or potentially Uniswap, if they turn on fees. So there's definitely tokens that are trending less towards just the governance token model, but more into something that actually has a fit into the application.
Yeah, I also agree with you that some of the governance structures are a little bit primitive, right? In the market, the way DAOs are organized. I mean, there are some good examples, but there are others, like the research reports mention some of the protocols only less than 10% participation for the DAO votes every time, or even 10% was too much already. So that wouldn't be a good representation of the actual holder crowds, right? So hopefully there will be methods and structures that will put in place to improve this. At the same time, of course, value capture by the token. It's a hot topic, especially in this market, right? Everyone's looking at fees, at revenues, rather than like immediate capital gains. Yeah, to put it this way. And okay. So we were in 2023, and imagine maybe 30 years later, we're in 2053. Well, both of us will still be around, I know, and hopefully we'll still be around in the crypto world. And what would you see that future look like? Well, sorry, I need to put a disclaimer here. It's not for you to predict how much Bitcoin or Ethereum is going to be worth. It's more on the adoption, in the Web3 world or in the real world, as you pointed out earlier.
Sure. So I think, well, I'm very bullish on Ethereum. I mean, I have a big bag of it, but also like we're building a solution to scale it out. So I do think like the end game. I mean, it's far away, but if I had to choose, I would say Ethereum is the de facto winner, given like the network effect, and I expect that to carry on in 2050. But what's interesting though is like you start thinking about, well, what does that mean for the scaling solutions? Like who's winning? Ideally, it would be zk rollups, but I think what you'll see is a bunch of other L2s as well. I think you'll see a lot of L2s feeding into Ethereum. And I think each of these chains will have their own applications, and that'll take part of the fees, and it'll all go back into on top of it. So that's kind of how I see it play out. And maybe one of those takes a particular larger share of the block space, but I think it all reconciles on top of Ethereum. In terms of like what's being built and financialized, I don't think everything should be on the blockchain, nor is it like economically like prudent to do that. But I do think it'll be like, I'd say the majority of things is really two things, right? One side is the degenerate stuff, and then the second part is the institutional adoption. So you have, I think one of the crypto's main use cases is speculation. So, we see a lot of the adoption with perpetual dexes, like, being able to use leverage, but you may not want to use a decentralized exchange, as you've seen, FTX and all these other centralized exchanges blow up. So, like, a project that lets you do that without having to go through all these, hoops, I think they'll benefit greatly in terms of usage. And, I think the other part is like, prediction markets, like sports betting. You're going to be able to attract a lot of users that way. I think that's another opportunity I see where we're treading, where, more and more folks are seeing gambling speculation as a way to pass time. But then on the other side of the spectrum is more wholesome, right? I mean, it depends on how you see it. But like, the tokenization of more of the real assets. I think eventually, I forgot it was Blackstone or BlackRock. One of those, they want, ultimately their goal is to tokenize securities, right? They want to tokenize stocks. They want to tokenize the whole brokerage experience. So I think that will also bring a lot of that side of the space. And what comes with that is like, wealth management, traditional services that banks offer. So you have these like very, KYC oriented, secure, institutional kind of chains. So I'd expect those kind of two dynamics to play out for both extremes. Just because that's how it's been. I think we're driven by incentives.
Yeah. So on one side is the degen stuff, right? The other side is mainstream adoption, right? It's not only just adoption of cryptocurrency, but overall more the entire blockchain technology and the applications. Yeah, definitely agree. So Sam, yeah, thank you for your time today. It's been a pleasure having this conversation with you, and our audience, our community members would also have additional questions, and we'll collect them and send to you.
Anytime. Yeah. Thanks, Matt.
You're welcome. Thank you.
Thanks for listening to the FutureX Podcast. Subscribe on Spotify or wherever you're listening to this episode.